So it's quarterly season, and so far in the month of May, which hasn't ended yet, we are at 320 quarterlies, right? Which is roughly a third of the entire Malaysian stock market. So we will expect more to come. That's why this video is part 1. Too busy to find stock ideas? Check out Fire Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description. But just to share with you some of the findings, right? 1/5 making losses. Almost half have dropped when you compare year and year in terms of their earnings, right? Yeah. 40% declared dividends, and only less than 2% of companies paid more than a 6% dividend yield. Basically means that only 1.5% of companies match EPF.
Yes.
So let's dig into some of these companies that we might be interested in.
Yep.
But of course, one step before that would be some of the industries that have shown themselves to be quite positive in quite an uncertain quarter, if you think about it, right? Although to be fair, this is quarter one.
Yeah.
So Q2, we would get a more accurate answer.
Yep.
So the three are solar, palm oil, and retail.
Yes. Yep. So these three are thus far, they reported positive in terms of year-on-year earnings, and some of them also given out dividends. And you can see that some of the companies, we're going to be talking each of the sector, but first we're going to be covering solar. You can see SolarVest, Pekat, and also BM Green Tech.
The big surprise was Pekat, right?
Yes. Technically, Pekat and SolarVest, because you can see that the increase in revenue actually it went up quite a lot. If you look at just like compared to the previous.
I wonder how much of it was because they anticipated solar tariffs.
No, I think this is just purely based on domestic kind of like demand.
Okay.
The NETR the NETR play is still going up, and then there's like a lot of these new projects like LSS5. There's also another kind of like program that is going up. Basically, the government is like trying to not to say rush, in a way also to rush also, so that they can hit their renewable energy kind of like target, the NETR. But you can see that their profits are all going up consecutively. SolarVest from 7 million, now it's like 20 million per quarter. Then for Pekat, it's like 4 million, now it's like 12 million. BM Green Tech, this one is their business model last time used to be broiler only. Like they do palm oil broiler kind of like business model, but right now they recently actually diversify into solar. So that's why you also can see that their earnings also have been improving from like 7 million in the past. At the high was like 11 million, but right now it's about 15.7 million ish. So everything is going up. But the flip side is the investors are giving all of these companies a premium valuation. So you can see that SolarVest is 33 times earnings, Pekat 38 times, and then BM Green Tech last time I think they used to be around like 11 times ish, but because they just went into solar, their share price skyrocketed a lot, and then the PE ratio also re-rated double. So essentially, right, if companies want to re-rate their valuations, go for solar. But no, because actually solar, right, is kind of like it requires it's a very capital intensive business. So to speak, in the way that you have to hire, I think the machine, that one is fine, but you have to hire more people, you have to subcon a lot of things out. Inventory wise, I'm not sure whether they have to like buy the solar panel and keep into their warehouse or not. But essentially this business is very fragmented already. There's a lot of players are coming into this space. And also how they bid for contract is always based on the lower price. So how low you can go, then usually the projects will be awarded to them. It's a lot of price war in this sector. But still, investors still like this industry because it is somewhat of a stable growth because of the current initiative. So that's all. Second one is palm oil. Obviously, if you can look at the CPO prices, right? Crude oil, palm oil prices, they are all going up. I think right now, if you compare to 2024's figure, it is up like 5%-ish in terms of the growth. And this also had helped a lot of the upstream players like Sarawak Oil Palm, TSH, and also Johor Plantations to report better earnings. Now, if you notice, these names, why I select these three companies is because they are from different states. So Sarawak is from Sarawak. TSH is from Johor is from Johor, basically Peninsula, and then TSH is from Sabah and also Indonesia. So even though they are different states, but they are still making a decent profit if you compare to like the previous years. Now, the interesting thing is that for plantation, the valuation is the flip of solar. So solar is like 20, 30 times, right? Plantation is like 5 times to 10 times. That's about it. And I'll say it's justifiable because of ESG, number one. EU, they have like this initiative that they are not going to be buying palm oil for their renewable energy kind of like act. So by 2030, they say they want to stop buying palm oil. That's why there's a lot of this Malaysia, they are changing who they are going to be exporting to. So they are exporting less to the EU and they are shifting it to South Africa or maybe even like MENA or like China. But China right now is like dropping like 40%. So a re-rating
The
factor,
demand, you mean?
Yes, correct. So the consumption, yeah. So the re-rating factor will be, let's say China start to consume more, or the surprising catalyst will be EU start to buy more also. So
can you say that it's like an indirect evidence that China is actually, the consumption is low? Is that one way to look at it?
Yes, you can say that. Probably also because they are
buying soybean.
Yes, correct.
Right.
Banking on soybean, yes. But recently, I think if you look at Malaysia's government, they have a talk with the China president, Xi Jinping. In the past, they did mention that they want to like use more palm oil or like buy more palm oil, but it still haven't really showed in terms of the export data. But we shall see in the next few months. Okay, next one is retail. This one also has been going up pretty steady. So you have 99 Speedmart, Mr. DIY, and Eco Shop. This one is, I think, proven to be some sort of like a recessionary proof already, because even though during a recession period, people still need to like buy the essential stuff. That's why you can see that their revenue is still going up, earnings also improving. Same for the Mr. DIY. Eco Shop, they just recently IPO, so we only got this one quarter's number. But if you compare with one of their prospectus numbers, I think it's also still like growing up a little bit. This is also another premium valuation. Why they're given a premium valuation is because I think their business is very stable.
Cradle back
also. That's why the market just likes them. 30 times to 40 times PE. For Eco Shop, it's about close to 40 times, and their share price is about 1 ringgit and 20 cents at the moment. That's why as a retail investor, when you buy this kind of business, it's pretty tough because the upside is actually very minimal already. Your margin of safety is basically very low if you want to invest in this kind of like businesses. So the only time to buy is when they reported bad quarterlies. Because usually when they report bad quarterlies, those people who expected highly about them will start to like derate. So that's the only opportunity time if you want to buy retail businesses. Okay, so that's the positive sectors. Negative sectors, they are the oil and gas, the glove, and also the tech. So in our previous video, our expectation video, based on the export data by DOSM, we thought that tech sector will be doing well.
Good comeback, yeah.
Yeah, good comeback. But their numbers is actually very bad. Yeah. So this tells you that the demand for our services are still not so much of a needed.
I think the big one is China, right? Because there are a lot of the things that we used to do, they want to do now, and they're going to do it for a lower cost.
Yes,
so
correct.
you're not going to fight that, right?
Yes, correct. That and also the US, maybe the reason why our export data for tech is going up is not related to OSAT or maybe ATE. Maybe it's more towards the EMS, the even more low value added services. But yeah, generally it's still not so good. Okay, the unexpected one actually is MSM. This is unexpectedly bad because you can see that their revenue dropped a lot. Sales is actually pretty horrendous, and you can see that the market also, they got quite spooked about their quarterly, so there's a major sell-off about 14%.
Which of course a shame because they have the subsidies, right?
Yes, they have the subsidies, but they are not generating revenue. So actually, this quarter, it should mimic quarter 4 one. If you base on historical, like quarter 4 2023 and quarter 1 2024, the numbers, sales, maybe it will drop down a little bit, but their earnings would be like on par. But for this particular quarter, it actually dropped even more. So which means like not only they are facing sales issue, which is the average selling prices are going down and sales volume also going down. Cost also is another thing that they are facing, even though they have subsidy. So that's why the market in general, they just like cut their earnings forecast. So even like MIDF, they say that, you know what, there's a lot of, like they say, uncontrolled dumping of imported sugar. I saw this one is from Thailand. They actually sold a lot of sugar into Malaysia. That's why there's a lot of like price war happening among MSM and also the Thai sugars. And they derated their earnings forecast. And this is the unexpected that we didn't think of. Okay, then finally we have the interesting companies that we didn't mention because they are from different sectors.
Yeah.
So there's Mega Fortress, Malayan Cement, Intabina, and also Cyberjaya Education. So these 4 companies are pretty diverse in terms of what they do. Why Mega Fortress is inside here? Because we did cover an IPO analysis on Mega Fortress, so you can watch it somewhere around here. But if you can recall, their valuation is actually very premium. I think it was like around 30 to 40 times PE. Yep. But right now, it's actually trading at 16 times. So it's like half already.
So the earnings went up.
Yes,
and the price also probably went down.
Yeah. The price, the share price went down, earnings go up. So yeah, there's something that is happening. There's inversion happening for Mega Fortress. And then for Malayan Cement, they are still reporting good figures. Obviously, because construction right now is kind of like booming, especially for data centers. And also there's a lot of like projects ongoing. Their profits are still at 16% margin, better than last year. Then we have Intabina. So this one is a construction company also. So why they are going up is because they actually have a data center project from Sime Darby property, if I'm not mistaken, or Sime Darby Berhad. But yeah, so that's why their results are still going up. And then the most shocking one is actually Cyberjaya Education. I didn't know that there's university students are enrolling in this Cyberjaya Education group.
Not sure where they're coming from. But okay.
Yeah. So previously, I think the figure was around like, if I can recall correctly, 3,000 enrollment in 2019, and then right now it's like about 10,000, if I can recall correctly. Yeah. So yeah, there's a big number of people. I don't know what's happening in Cyberjaya. Maybe more people are visiting there or are staying there. That's why there's more enrollment. But yeah, I was shocked when I was like looking at this quarterly number. So now you can see some of the price action, right? Some of the companies obviously went up, some they didn't go up. So like Mega Fortress, potentially maybe this will be interesting because people are still dumping. But the risk about Mega Fortress, as we highlighted in the video, is that China, they can mass produce a lot of what Mega Fortress has. But the only thing that Mega Fortress can compete is the quality of the product that they produce.
The ISO standards and things like that.
Yep. And then for Malayan Cement, this one already went up a lot already. But then right now it's like trading at 13 times earnings. So this one also looks pretty interesting. Cyberjaya Education is 12 times. And then Intabina is about 9 times. So whether there's still more upside or not, this one we're not too sure. But so far, their quarterlies show that it seems to be there is still some more growth and also based on their prospects on what they have highlighted over there. So maybe these are some of the companies that you can take note of in this market chaos. So the overall thoughts is, 50% of them reported a drop in year-on-year earnings. So in general, it is a poor results. I think one of our research analysts got shared like a lot of miss in terms of earnings expectation, and also some of them are in line with expectation, not so good. Very little they outbeat their expectation. So that is the thus far 320 quarterly results. Now the second one is the winner is obviously Plantation, Solar, EPCC, and Retail. Plantation is something that we have talked about for a very long time already, since 2024, I think.
Pretty much.
Yeah, pretty much, yeah. And also we covered inside our Fire Pro over there. So if you want to know what companies is that we have initiated on or we have talked about, you can check out Fire Pro. The third one is tech results were below expectation. Previously we thought that they're going to be at least reporting better sales figure for those companies that actually export to the US. Because based on DOSM's data, it seems like pretty good. It's like going up double digit. But then in reality, when they announced their results, it was pretty bad. Yeah, so this side is nothing to share. Probably it is memang their services are not so in high demand at this current juncture. The fourth one is you may want to watch out for the interesting ones. So just now we talked about the Mega Fortress, Malayan Cement. Don't buy them, but then you can continue to monitor their progress because these are the companies that is actually reporting consecutively growth in terms of revenue and profits even during times like this, like a tariff chaos. So there is some sort of like resilient in terms of this kind of like uncertainty environment. So you may want to watch out for that. Now, last but not least is the expectation for the remaining quarterlies. So what do you think they will do?
Well, I think it's going to be more of the same. That's pretty much it. And it seems like Q2 will be worse.
Yeah, exactly. So my expectation is similar to MJ. It's going to be more or less lots of miss and in line. Very little going to be outbeat.
But you know, the thing is with the Malaysian stock market, so just to share this, right? Even though our economy is so much smaller than the US, the number of stocks in Malaysia is only about 1/5 or 1/6 that of the US. Now, why this is important is because basically for a country at our size, you shouldn't have that many listed companies. If the US, which is so big, have only about 6,000, something like that, and we have 1,000, it means that a lot of the companies that are inside Malaysia, the Malaysian stock market, shouldn't be there. Let me put it as nicely as possible. So it's therefore no surprise when we see that a lot of companies are not doing well, right? So
yeah, but I think also this is one of the government's initiative. They say they are trying to encourage more SMEs to actually go list, to list publicly.
Yeah, so that for me is a bit of a question mark, right? Because if you look through a lot of the IPOs that come through, there's nothing special, and a lot of them just feel like, obviously I'm not going to name names, but they just feel like exits. So if I'm the government, the question I'll be asking is, okay, how do we promote behavior where people don't think that listing is an exit, but just the beginning, right? Yeah. That's one. Number two is, I think the SC chairman has already highlighted this, which is very encouraging, to unlock the capital that is stored in a lot of these existing companies where they don't need that much cash to operate, but they still have a lot of it in the bank, and a lot of this should be paid out to shareholders. I think when we do that, so instead of getting new people in, we have to fix the existing one. And there are a lot of companies, as we all know, right, with a lot of cash, and it's not being paid out.
Yeah.
And so there needs to be some sort of mechanism. Could be a hard stick, could be a soft one, right? Hard one would be some sort of law, but a soft one would be maybe
name and shame.
Name and shame, yeah. So I've always talked about this thing called the shareholder friendliness index. The company can always create, right? They can create certain reasonable formulas for each companies as to how much dividends they should be paying. And so if that company falls below, then it's to name and shame.
So we highlighted a few interesting companies inside this video, but if you want to know more and companies that we personally hold, or we personally think that there's a better prospects in the future, you can check it out inside Fire Pro. We do a lot of like analysis on stocks. Every single month, we do at least 2 write-ups, and we do it at a very, very short write-ups only. It's like some sort of like a report. So you can actually read it. It just takes you like 15 minutes only to understand about the entire business model, the prospects, the catalysts, the risks, and also the valuation. And also you get to know if we personally own it or we have initiated inside the portfolio, this reference portfolio. And if let's say we do exit out or we personally sell it out, we also would notify you guys inside that. So if you want to know more about Fire Pro and also our global portfolio and also our boring portfolio, which is the dividend portfolio, you can check it out inside there. And if you want to know how we do our write-ups, you can read it in our free sample. It's totally for you. It's free. You can see the 2 companies that we have write up, KGB and also Delium. And just to highlight a little bit about Delium is when we initiated it inside our Fire Pro portfolio, it is over here. And then we exited somewhere around the top lah. It's not really at the peak, but then it's like close to the peak. And yeah, we basically, some of our members did make some profits off from there. We didn't tell them to buy. They own self make their own decision. And some of the stocks we shared, but then we didn't buy personally, and they still make money out of it. So yeah, if you want to know more about Fire Pro, make sure to check it out. The links will be in the description and comments. And that's about it for today's video. See you guys next week.